Hi everyone, my name is Grace Cisna, and today I want to walk you through our dispensary template that we sell at ProjectionHub.com. I'm going to get started on the Input Assumptions tab, and then I'll backtrack to the Investor Dashboard at the end. This template is good for any business that's opening some type of dispensary, whether that's cannabis or CBD or just any other sort of product that's sold by the unit of measurement. Let's start on the Input Assumptions tab. So a couple things I want to point out about all of our Excel templates. You'll see several tabs in this light blue color that are labeled Input tabs, and this is where you're going to need to input data in order to build out the financial statements, which are in the second half of the model. On the light blue tabs, you will see cells in the corresponding light blue color that are directing you to areas where you need to input data. You'll see that there's already data in these light blue cells, and this is just example data to show you how to format it or to direct you where you need to input data. It's by no means an industry standard or recommended amounts. It's just to direct you to the right area. So in the Input Assumptions tab, we're going to collect some assumptions to build out your balance sheet. We'll ask for a company name, projection start date, and that should be the first of a month. Investment amounts, either from personal investment or outside investment, sometimes crowdfunding is another source of investment funds, and that can go here. Accounts receivable terms, so if your customers are paying up front or if they're waiting to pay, you can enter those here. And then inventory balance, so 5,000 is going to be your first balance as shown here, and then your inventory will change with your sales. It's going to be 20% of the next month's cost of goods sold. You can also enter your fixed assets here, so any real estate improvements, say furniture and fixture signage as shown in the example data here. You enter the purchase price here. Its life expectancy and salvage costs are both used to calculate depreciation expense. Salvage cost is what you could sell the items for when they are no longer of use to you, and that just helps calculate the depreciation cost. And then purchase during which month of operation. Anytime you see 0 for the purchase month, you'll see it here in the investment amount as well. That is just going to be assuming that the purchase or the acquisition of funds is right before the balance sheet begins. So we call that your opening balance sheet, just assuming these things happen right before operations start. You can also enter any loans that you receive down here. You can enter up to 4. You enter the loan amounts, the amount you receive, the number of monthly payments, the interest rate, and then the month that payments will start on. Note in the model, for example, if we say that payments will start on month 1, it's going to be assumed that you receive the funds in month 0 or right before the balance sheet starts. So if your first payment is month 5, then the model will show the cash coming in month 4. So you can update that number accordingly. The next tab is the revenue model, which is the biggest and most important tab in this model. So on the revenue model, the first thing we look at is customer acquisition. So customer acquisition is a function of advertising spending in this model. So we look at the amount you're spending on advertising, and that is coming from the next tab, this first line here. And then the cost to acquire one new customer, annual growth rate, and then we'll have first-time customers from paid advertising. You can also have first-time customers from organic sources, so whether that's word of mouth or Googling, or they just pass you on the street and stop by. Customers that are not coming from those paid sources. And then we also look at building up a regular customer base. So once you have first-time customers, there's a chance that they will turn into regular customers and regularly show up at the business. So we look at a small percentage of those becoming regular customers. There's a churn rate for regular customers, so assuming that as you build your customer base, some will leave over time. And then we look at the number of times a regular customer visits per month. Right now it's set to 1, and you'll see that's 12 visits per year. If it's 2 per month, 24 visits per year, 0.8, etc. So this is going to update to show you how many visits per year. So assuming every regular customer visits once a month, plus all these new customer visits, will calculate out your total customer visits this month, which in the first month is just the first-time customers from advertising and the organic customers, because they don't become organic customers, recurring customers until the second month. We next scroll down to the product revenue here. So there's 2 types of products that are modeled in this tab. We have products sold by weight or measurement, and then products sold by each or individual items. So this could be your t-shirts, your cups, whatever it is, just things that are sold in individual, by individual piece as opposed to by weight or unit of measurement. So here you can enter your unit of measurement that you use to sell your product, and then you'll see that it uses that to update here So if we update to gram, you'll see average grams sold. So assuming ounces, and it'll say average ounces sold per customer visit. And that is just, again, an average. There's lots of averages in any financial projection model. Obviously, when you're predicting out, you can't predict the future exactly, so the most efficient way to do it is just to assume some averages and use those to create financial projections over time. So we allow you to enter up to 11 products. You can continue entering new rows if you have more than 11 products. And you enter the percentage of sales for which each product is responsible. So these could be either products or product categories. That is up to you. We'll see the average revenue per ounce here. So if you want to just classify it by low-cost products that are cost on average this much per month, medium costs that are this much per ounce, etc., you can do that. Divide this up sort of however is fit for you. You'll note here percentage of sales can be divided out over the different products that you enter. You'll want the total to be 100% though. So if product 1 is actually responsible for 20% of your sales, then it's important that you sort of average out the other products so that you have 100% down here. Otherwise, you're going to be overcounting your sales. Look at the average revenue per ounce for these per ounce products, and then also the average cost of product per ounce. So that is going to help us calculate our cost of goods sold at the bottom. And then we'll scroll down to average products sold by each. You'll see here that each person or each customer is purchasing on average 0.2 products per visit, or they're purchasing a product by each about once every 5 visits. And you can update that number accordingly. Again, enter your products or product categories here, your percentage of sales, and then your average revenue per product here, as well as the average cost per product. And then the model will do a little calculating the revenue per customer visit for products by weight and products by each. You can enter growth rates here to grow those over time, and then the model will calculate out your sales revenue and your cost of goods sold. The next tab is the Input Other Expenses tab, so expenses that are not cost of goods sold or salaries, which is calculated on a different tab. So you'll enter, as suggested here, advertising, accounting, computer services, software, whatever it might be that you pay for. That's an operating cost. You can enter it here on this tab. Note there's 2 ways to calculate other expenses. You can either use fixed amounts. So for example, computer services is going to be fixed at $20 per month, and that grows a little bit over time at the rate selected on the Input Assumptions tab here, which you can overwrite if you want to. So that is the fixed amount. And the other way would be total revenue. So right now, credit card fees is being calculated as 2% of total revenue. That's the 0.02. Because credit card fees are going to totally depend on the amount of revenue that you have. Taxes as well might be a percentage of revenue, as you can see on here. You can select the product category here, which is going to be used only on the investor dashboard, and you can see your options here for the categories. Just note that all of the amounts on this tab are monthly amounts, so even when it says remainder of year 1, that's going to be for months 4 through 12. This is going to be $1,000 a month for those, and then $1,030 a month for every month in year 2. So there's a reminder here that these are monthly expenses. We break out the first 3 months individually so that you can get any startup expenses built into the model. So if you have legal expenses that are just going to occur in the first month, we wanted to be able to break those out separately. You can enter your effective income tax rate down here. Just note that we always recommend speaking to a tax accountant in your area to give you a better idea of what your tax burden might be each month or each year. Input salaries and owner draws, the last input tab. On here, you can enter your employees. So here we also have hourly employees, indirect employees, essentially anybody that's not directly involved in the maybe packaging process. People that are getting paid regardless of volume of sales would all go on here. You can enter their job title, their annual salary, in this case our hourly employees. You can see up here are calculated at $10 an hour, 40 hours a week, and 52 weeks a year. There's also employer taxes and benefits. You can enter the month they start, as well as their ending month. Note the model is only 60 months, so ending month 60 is going to put them all throughout the model. And then you can also enter the number of that particular employee. So if there's 3 or 6 or whatever it might be, you can enter those here, give them an annual raise percent. We also have owner draw down here. So if you, the owner, prefer to draw on funds or pay yourself a distribution or a dividend, however you'd like to To name that, you can enter it down here, and this is just going to show as a distribution of cash of the business and not as an expense, or as a salary would be an expense on the income statement. You also see your cash balance at the end of the month down here so that you know how much money is available to be distributed. Once you've filled out all of those input tabs, we can move over to the output tab. So the first one is the at a glance tab. And this is going to show you some summary data for your financial statements, some nice graphs and charts, a break-even analysis here, as well as some key financial ratios. And these are pretty much ready to be snipped out and put into a pitch deck for you. We also have the summary format of 3 different financial statements. We have the income statement, the cash flow statement, and the balance sheet. The income statement is going to show your sales, your cost of goods sold, your operating expenses, and your income tax as well. There's earnings before interest, taxes, depreciation, and amortization, EBITDA, down here at the bottom. The cash flow statement is very similar to the income statement, but this one is related to cash inflows and outflows. On the cash flow statement, depreciation is not on here, as that is a non-cash expense. And there are a couple items on the cash flow statement that do not show up on the income statement. Cash from new investments, that's cash coming into the business, that's not revenue. Cash paid for fixed assets is cash leaving, that's used to acquire assets. So again, that's not an expense. You'll also note on a lot of these tabs, there are rows that are hidden, and those are rows that currently don't apply to the model. But this one here is cash from new loans. So if you did have a loan and you're not seeing that, go ahead and try unhiding some rows, and you'll find it there. We keep those hidden just to keep these nice and neat and ready for investor eyes. But if you're missing anything, always check to make sure it's not hidden. The balance sheet is going to show your assets, so your cash and inventory and fixed assets. Accounts receivable is also hidden here. And then your liabilities, in this case accounts payable, and then your shareholders' equity. So any paid-in capital, those initial investments, plus the retained earnings generated by the business. You'll note that our balance sheets always balance. One of the features of a ProjectionHub template is you don't have to balance your own balance sheet. It's generally a very time-consuming and frustrating process, so we wanted to build this out. It's always going to balance for you. You don't have to worry about that. We have those same 3 financial statements in the month-to-month format. So you'll see year 1, all 12 months, and then you scroll down for year 2, 3, 4, and 5. You can see some of our numbers here are a little too large for the screen, so we can adjust our columns to show them. The cash flow statement again for all 5 years, as well as the balance sheet. The last tab we'll take a look at is the investor dashboard. So the investor dashboard is new to version 2 of our Excel templates, and this enables you or an investor to play with some of the major assumptions of the model and see how it affects your balance sheet without actually changing the model itself. So several major assumptions from the revenue model are pulled forward onto this investor dashboard. For example, customer visits, customer purchase data, the revenue and cost of goods sold, and then expenses. And then you'll see at the bottom here we have the original income statement, which is from the income statement summary, and the income statement is summarized based on the categories on this other expenses tab, so these categories here. And then there's the modified income statement here, which right now is identical to the original income statement because all the data in blue is identical to the data in white. If we change the average revenue for products by weight here to 50, you'll see that our sales revenue in the modified income statement is now over that of the original income statement. So you can use this investor dashboard to play with some of the major assumptions of the model. You'll see here if we change this to 50, that is not going to change anything on the rest of our model. We still have the $45 here on the revenue model. So this is just about playing with different scenarios and seeing what might happen to your income statement. That can be useful for you or for an investor. If you have any questions about this model, please reach out to us at support@ProjectionHub.com. We have services available to fill this template out for you. So if you download it and decide that you need help filling it out, please reach out to us and we would be happy to help. We also can modify the template for you. So if it looks pretty good, but there's just a couple things you need to add, maybe you have a different source of revenue, you have some sort of subscription model or online sales, whatever it might be, we can add that model in for you through our consulting services. So if this looks pretty good, but you just need a little help or a little modification, please let us know. Also, if you have any questions, please reach out to us at support@ProjectionHub.com.